As a beginner trader, you need to understand this simple strategy I'm about to teach you to be able to make consistent winning trade. If you know you want to be consistent, you want to be making this consistent winning trade as a beginner trader, you need to watch this video from the beginning to the end and make sure you listen attentively to everything I'm about to say in this video. So let's go. So the first thing I do whenever I go to the charts, whenever I want to trade, is to identify the market structure, which is the important thing. The first thing is I identify the market structure. Maybe the market is in the uptrend or is in a downtrend. So after identifying the market structure that you can see now on the screen, like you can see the market is higher high and higher low, higher high and higher low, higher high and higher low. So the first thing I do after I identify the market structure, I identify the recent higher low, which is this, the recent higher low. So I mark it out like this from this point. I mark it out like this is the recent higher low, like this. So and I mark the recent higher high too, the recent higher high, which is this. You can see that this is the recent higher high. After I mark it out like this, the next thing I do is to wait for the pullback. So when the market is already pulling back, so I mark it out. Okay, this is my higher high. So it's already pulling back, like it's already coming back. So I now wait. I wait for the market because that is where a lot of traders miss it. They lack patience. They didn't know how to wait. But God gave me the gift of patience. I have patience enough. So I will wait for the market to start pulling back, and I'll bring out my Fibonacci retracement to draw it from the bottom of this to the top. Bottom of this to the top. So what am I waiting for? I'm waiting for price to pull back to at least 50% of this retracement level. Even if price pull back from, like, let's say for example, maybe price is pulling back, you now get to, maybe price is pulling back like this, it gets to this place, that's why reversing. I'm not going to go into the trade because I know that this pullback here, this thing that forms a higher low here, is a liquidity structure. So I didn't take that trade. I won't even go into the trade at all. So the only thing I do is that I wait. If market did not pull back at least to this my 50% structure level, I'm not going into the trade at all. I'm not even looking for any opportunity to go for long. So I will wait patiently for market to pull back at least to my 50% or my 61% or my 78% retracement level. So what I do, the next thing I do is that to look for my POI, the point of interest, below the 50%. I look for my point of interest. Let's say for example, maybe there is other block around this place. There's other block around this place. Fine. Maybe there's another other block in this place. We have two other block. So this is the first PO. This is the first POI, which is point of interest. The first point of interest. I'm sorry, the network is a little bit slow. So this is the first point of interest. This is the second point of interest. So what I'm waiting for is I'm waiting for the market to pull back to at least to this 61 or 70, 78. So after I've identified my point of interest below the 50%, I will go and delete this Fibonacci retracement. So it's not, I don't need it anymore. So I'm just waiting for price to start pulling back. So after price started pulling back, when come on, I didn't need it again. So after I started pulling back like this, the price started doing this, started coming down to my level, to my point of interest, started coming back. Let's say eventually the price now touches my point of interest and started reacting. I will not go into the trade. I'm not going into the trade immediately. What I want to see is that immediately price touches my point of interest, my first point of interest, I will move down to the lower time frame, which is at least, let's say maybe I'm analyzing from the 1 hour time frame. I'll move down to at least maybe 15-minute time frame or 5-minute time frame to wait for my market shift, to see a market shift like this little downtrend to be over. I'm waiting for price to at least, maybe when I move to my 15 minutes or my 5-minute time frame, I want to see this uptrend, this downtrend towards at least to break structure and come back and test this zone and move up before going like this. Because I want price to break this level, to break this lower high on my lower time frame, which is on my maybe 15-minute time frame or my 5-minute time frame. I want price to break this lower high. After price breaks this lower high, I identify the point of interest below the structure that broke the high. Maybe I'll bring out my Fibonacci tools again. After I went to the 15-minute or the 5-minute time frame, I bring out my Fibonacci tools, I draw it to the structure, new structure that broke, that started pulling back. So I identify my PO, which is the point of interest, either order block or supply or the demand zone below it. So order the order block or the demand zone. It's not particularly important to be order block. Sometimes you may not see order block. Just see, if you see any demand zone, just identify it and wait for price to come. So that's how I trade. So after I see this market shifts on the 15-minute time frame, identify my point of interest and I set it. I set what? I set my buy limit here. Put it down here. So at least it should give me a breathing space, and I bring it up to this level, which is at least 1 to 4. You can see 1 to 4.27 is also a good trade because I do 1 to 3, maximum 1 to 3. That's what I do. So this is it. You can see. So in case it, so if price like I'm not saying that maybe you should go if you have this confidence of going with this risk entry. You can wait, or you can move down to the 1 minute time frame to see it clearly. But if I've seen this on the 5-minute time frame, like I've seen this market shift on the 5-minute time frame, and it has come back to the state of my demand, I don't need to wait for this. I know that since I've seen a market shift on my 5-minute time frame or my 15-minute time frame on this, and I've seen it pull back, I set and forget. I set it there and I go away from trading view, or I move to the next pair I want to analyze. That is simple as ABC. That's simple as ABC. But maybe you don't have this confidence of doing this. Let me teach you another one you can do after you have moved to the 5-minute time frame. You can also maybe, let's say for example, uptrend. Okay, uptrend. 1, 2, 3. So this is the main trend. So this is the break of structure. I'm telling you, this is exactly how I do. This is exactly what I do. If you think maybe there is one thing somewhere, no. After doing this, identify it, duplicate it, and bring it down to this level. So for some people that they'll be like, what if the market has not started pulling back? I'll just wait for the market to start pulling back. Since I have something like this, identify this point or this break of structure, and the market is still moving higher, I'm not going in. If I see any maybe order block or demand zone around this up here, I'm not trading it all, because I know for sure that market will blow past it and come and retest. So all I will do is to wait for the market to start. You shall be going. So I'll wait for the market to start pulling back. Anytime, any day I see the market start pulling back from this uptrend like this, that is when I will identify my higher high. That is when I will draw my higher high like this. I will draw it out. That is the first thing I do. After I mark it up like this, I'll bring out my Fibonacci retracement tools, drag it from the swing low to the swing high like this. So what am I saying? After that, I wait for market to come at least to this 50%, 61 or 78. So most of the time, market do come to my 78 like this. So when market touch, maybe I have any point of interest here or here. Most of the if I see any point of interest for this 50%, most of the time I don't trade it. Most of the time I don't trade it because I know that sometimes market will blow past it and just it's my stop loss. So I wait for market to come down to this 61 or 78. So for you people that will be like, if you don't trade it, this and that, it pays me to lose some trade, like to miss some opportunities than to lose money, because I don't want to lose my capital anyhow. Not even with my rules and regulations, okay, because I have these rules that I follow. That, okay, this is what I want to do when the market like this. This is what I follow. Understand? So everybody, market perspective is very, very. Everybody rules and regulation for the market is very, very different. So this is exactly what I do. After the price moved down, like started coming down like this to my point of interest, I want to start seeing reaction at this level like this, and come to my demand zone, and let me see a market shift from the lower time frame. Immediately price touch my point of interest, I move down to the lower time frame to wait for the market shift, and comes back. Sometimes it may not comes back again to this point of interest. It may just be like this and go like this. You understand? But please, the best thing I want you guys to do is what? To always wait for market to touch your point of interest before you end, and make sure you see the market shift from the lower time frame, because that is very very important. So that is the simple strategy I use every day. I use it on GBP USD, Euro USD, and USD JPY. Yes, that three pair I use it very very, and it has made me profitable. And also in GBP JPY too. I remember it has made me profitable. I've back tested it. I've traded on the demo account. I've traded on the live account. So believe me what I'm saying. I'm not just saying this that maybe it's a demo account. No, I traded it on my live account. I will even show you. This is the example. Like I'll show you at the end of this video the trade I took, how it goes and stuff like that. So believe me, if you can use this strategy, you can have the patience to wait, you will enjoy it. In fact, you'll be seeing that back to back winning. So I want you guys to go and back test it and test it out. God bless you. Bye. The journal of the trade I took last week. This is the journal on Euro USD. So this is the time around 11:30. Immediately the market opened on 9th of February. Market was going higher and higher low, as I explained, and a normal trading mode. This is my entry, a take profit, and so this is it. Immediately market opened, I was tagging into the position, and you can see that market was showing a reaction on the trend line. I was still holding, hoping that if market break this black line, I'm going to take the little profit, any profit I make. And you can see, that market is about to change character by creating new trend line to the downside. So you can see, but that I didn't panic about that. So after that, price break through the new trend line and continue an uptrend. You see, I take profit. This is exactly the strategy I explained to you guys. If you can master that strategy, I'm very very sure it's going to, like, you're going to make a lot of profits. If you can master it, you just master it, like master again and master again, you're going to make a lot of profits with that strategy. The only thing you need is that if you understand the strategy, it's very very simple and reliable. It's very very simple and reliable. Thank you so much.